Welcome to this week's strategy session. Great to have you with me. Lots of interesting things to talk about this week. I'm not doing a live session this week and I'm only doing one video. Reason for that is I'm down on the New South Wales south coast, about an hour out of Sydney. I don't really have very good internet reception down here. Internet's not cut out for live streaming here. So yeah, I'm just going to do the pre-record. But still, lots of good stuff to go through. We've got the SP 500. We've got the local ASX indices to have a look at. I've also got gold there, copper, uranium. I'll go through pretty quickly this week, try and keep it a little bit shorter than usual. As always, general commentary doesn't take your personal situation into account. If you need personal advice, you've got to go and get that separately. So general commentary only. Well, with all of that said, let's get into our first chart. So going to start off with the S&P 500. We'll kick off with the US markets, and it's really closing in rapidly on this this all-time high from back in January 2022. So nearly 2 years ago, we've seen the market just within a whisker on Thursday of that level, and will we close the year with a new all-time high? Let's wait and see, but it's just within about 0.5% of that mark now. Really thin holiday trading is starting to kick in. It's any which way I look at this, this isn't an asymmetric entry level. It's a market which is now quite stretched above these moving averages. The moving averages are rising, which is positive. So I think the overall trend is upwards. It's just a case of like, where do you get on board? If you're not on board yet, should you get on board now? And my thinking is, well, if you're not on board, I probably wouldn't want to be initiating a new position at current levels. I'm certainly letting my profits run with the stock market positioning which I have, but I'm just hesitant to buy a market which has come so far off those October lows. Also interesting when I look at an RSI. So let me just put an RSI on this chart, and you'll see we're at a point now where the S&P 500 it is making a new high for this run off the October low. It surpassed the high from a couple of weeks back, but look down here at the RSI. So the RSI did make a new high a couple of weeks ago, but the current RSI level is well below where it recently was. So that's some negative divergence coming in. So when you couple that with the market, which has run quite hard, without having a decent pullback, is getting stretched above those averages, I think it then just increases that risk of a near-term pullback. It doesn't guarantee it will happen, but I think the odds start to tilt in favor of that pullback. Quick look at the Nasdaq. Well, the Nasdaq has made a new all-time high. It's similar situation to the S&P 500 in that it has had a big run. It is stretched. I think the play here is to let profits on existing positions run, because markets can continue to get stretched. We don't know how far it will run, and any pause may well just be temporary. That would be my base case at this point, that we do get a pullback. It is temporary, and then new highs can follow in 2024. So I do want to keep my open positions in play. I want to let them run, but I do want to take care now that the market is in this this current stretch state in terms of adding new positions. I'm hesitant to add new positions at this time. Just a quick look at the Russell, same story, big run up. It's actually starting to break out of this trading range, which has spent the last 18 months in. So you go back to, it's going back into to June 2022 when this range begun. Overhead resistance from the range was coming in at around around 2020 thereabouts. Had a break above it. Whether this initial break can be sustained, I've got my doubts that will be the case. I do think we're going to see a pullback. We may see a pullback within a range, within the old range. But overall, I think this is a great platform which is now being built, and it does look like we're starting to push out of that old range, and that a new upward period of trending prices can continue as we move into 2024. But the big thing is, like, do we get that pullback beforehand? And and how long does it take for the market to consolidate before it can then continue to rally and start moving back up towards these all-time highs from November 2021. I think that's the way to look at this market. I think the way to position is to be on the long side on the likelihood that the trend can extend, and in the months ahead it does head back towards those all-time highs. Now let's go and have a look at the Aussie market. If you're one of my US viewers and you're not watching the Aussie market, please give me that like, leave a short comment that you like the video, or if the video helped, let me know. Let me know what you thought. Hit that subscribe button if you haven't already. Now, for my Aussie viewers, let's look at that ASX 200. And it's been another good week. Like those US markets, it's getting within a whisker of those all-time highs, going back to 2022, mid 2021. So it's been a while since we've seen the market up at these levels. But we do have big overhead resistance coming in at around 7,640 thereabouts, which is currently where the market is. It's like those US markets, it's just not asymmetric in terms of entering. Now, when I say asymmetric, it's like when you look for an asymmetric entry point, you want a point where your relative downside is small compared to your potential upside. It just gets very difficult when a market goes, like, let's just see how far this market's run in the last, since the 20th of November, it's up almost 10%. So for a major industry to be up around 10% in a little over a month, it's a big move, and it's a move which often does lead to some consolidation. And I think that remains quite a likely scenario for the ASX 200. Overhead resistance coupled with a stretched market above the moving averages, to me, I think is a market which is getting close to getting some type of a pause. Last week I was talking about the ASX 200 being in FOMO territory, or being in the FOMO zone, and this is where people who have missed this initial rise, who have been staying out of the market, see it run hard and think, well, I don't have any position, I better get some, and they start to build those positions at elevated levels. What can often happen then is the market does pull back. They then get fearful that they're bought at the top, and then they start to sell those positions. That leads to that consolidation playing out maybe over several weeks, maybe some volatility within it, and then the market stabilizes, and then often does go on for a sustained run then. So you never know how these things are going to play out, but that's I think that's a scenario that we could potentially look for, that we do get a pause, we do get a pullback, latecomers get out, get a bit worried, and then we stabilize, and then we get a sustained break upwards. So any which way, I'm leaving my profits on the stocks in my portfolio run. Seen some really good gains over the last couple of months, and as I always do, I resist that urge to lock in a profit, because I don't want to cap the potential of my best trades. I want to see how far they can run. I don't want to place a limit on them by selling whilst they're moving upwards. I'll also give them plenty of room to move around as well. So if we do get a pause and we do get a pullback, I can hopefully ride that out and then be on board if the market does continue to rise into the new year. But just stepping back and looking at this price action, I think it's overall encouraging. I think the structure's encouraging. We had the big rally of the 2020 lows. We've had the big consolidation, the big sideways move. And I think this big sideways move that we've had, 2 years worth of it, 2 years of sideways price action, I think that sets the stage for a breakout as we move into 2024. For me, it's a case of like, how would the breakout potentially go? Do we get that pullback? Do we get consolidation? And that could still take several months to move sideways after this initial run. And then do we get a breakout? I don't know how all that plays out. So I think it's just a case of keeping it simple. Keep your stocks which are working, let them run, let them do all they can do. And those stocks which aren't working, you cut them, you rotate the capital in the stocks which are then breaking out to new highs, bouncing off their moving averages, and chasing that momentum. Let the momentum be be your trading partner, and avoid those stocks which are languishing. Now, let's jump to some commodities. We'll wrap up with some commodities. We'll start with gold. And interesting week with gold. It's up, retesting this big overhead resistance at around 2080. Just compressing this a bit to see where that has come from. And you can see we've got these three key highs in gold over the last 3 years. 3 years of sideways price action in gold. It's a big level. Is it going to get through now? I don't know. But what I do think has been encouraging is that we did have that acceleration higher a few weeks ago. A lot of stop losses being triggered above the previous highs. Then we had the big shakeout. I've spoken about this in previous weeks. What's been encouraging is that there was buying interest on the shakeout. So the latecomers got stopped out, sold their positions, and there's been buying interest to take on those positions, and the market has been rising back up towards that big overhead resistance again. And it's also come off the 50-day moving average, which is another encouraging sign. So I think this market is being underpinned by buying interest on dips. So I don't know whether that means we're going to accelerate higher now, but that potential certainly does exist. It exists given that there was no follow-through selling on this shakeout, and the prices immediately started pushing back upwards. So let's see how this plays out. I think the way to be positioned is certainly on the long side, and it's a case of, if we do start seeing this price move up through 2000, well, giving a bit of room above the old resistance, just probably above 2100. That's probably the point where I'd consider like maybe adding to the physical gold positions that I have. Whether I do or not, I don't know, but that's where I'd consider it. Gold stocks are a little bit different. They're still not really fully in sync with gold, but they are. There are positive signs in that underlying gold stock universe as well. Just we looked at Newmont last week, how it was just trying to break above some resistance. So let's have a look at go to copper. Quick look at copper, and again, it's continued to strengthen through the week. Just underneath this overhead resistance, it comes in around $4. So copper is starting to again look. It's looked encouraging for a few months now. Really, we've got this rounding basing structure higher. We're getting higher highs and higher lows over the last couple of months. Broken this trend line resistance, and now it's just beneath overhead resistance. So probably not a time to be buying just beneath resistance, but it does look to be one of those markets which we could see higher levels in the new year. And just lastly, just finishing up on uranium. And uranium, it's new 16-year high. So nothing's really changed from what I said last week. This is a market which continues to push higher. I'm long uranium. I'm staying long uranium and just see where the price goes. It's felt like it's been needy of a pullback for a while, but as you know, I've been wrong on that call for a pullback. And I think whilst I've been wrong on the call for the pullback, the thing I've gotten right with my own positioning is that I haven't sold preempting a pullback with the idea that I'll buy back later on. I've just let my winning positions run, not tried to be too clever, not tried to trade around them. And so far that's been working. Just looking at the gold stocks, some of these Aussie gold stocks like Paladin, they've been moving sideways for a couple of months now, and I think that's encouraging. We just compress Paladin. You can see that had the big run up during 2020, 2021, the big consolidation for what's it, 2 years worth of consolidation, this downward trending channel. Got the breakout last year. Now we've got the return move to near the breakout point, and we've been going sideways. So that creates a new platform, provides a new platform for the Paladin share price to potentially break higher and go on another run. Whether it will or not, we don't know. The key there would be, like, it's on those moving averages now. So this is where you potentially get the rebound off the averages. For me, it's a case where I've got this blue horizontal line, these previous highs, that comes in at around $1.05, $1.10 thereabouts. see Paladin get back up to around $1.10, well, then it's a case of, well, okay, rallying off the moving averages, breaking above resistance from previous highs, that comes back into play. But at the moment, it's sideways, so I'm not looking to add to uranium positions just at the moment. So look, I said I'd keep it a little bit shorter this week, and that's what we've done. So next week I'll come back with the usual format. So hopefully that's a brief update, been interesting, been helpful in this Christmas period. Hope you all have a good New Year's. Thank you for joining me for the whole year. Like the year just passed, 2023. It's been great having you with these strategy sessions and the US version that I do. And look, have a good New Year's. Look forward to coming back, seeing you in the new year next Friday. Till then, bye for now.